Well, economies around the world have been showing signs of cooling off in recent weeks, from the U.S. to China. And joining us now with a closer look at the recent strains that we're seeing in the global economic recovery is Peter Schiff. He's the CEO and global strategist of Euro-Pacific Capital. Peter, thanks so much for joining us. Let's get straight into it. And let's focus on the U.S. economy. On Friday, we're going to get the first look at first quarter GDP figures. They're going to offer some insight as to the extent of the U.S. recovery. Now, according to economists polled by Reuters, the U.S. economy is expected to grow at an annual rate of 3%, compared with growth of just 0.4% in the fourth quarter. The U.S. economy has been whipsawing between periods of modest growth to no growth at all. So is this really the new normal for the U.S. economy?
Well, first of all, just because the GDP number is getting bigger, it doesn't necessarily mean the U.S. economy is actually growing. It's just the way we calculate the growth. A lot of it is because we're underestimating inflation. You know, we deflate the GDP with a number that the government calculates, and it purports to represent inflation. But I think that number is much too low, and therefore the GDP is being overstated. But in addition to that, a lot of the GDP is simply spending borrowed money. You know, we have a huge trade deficit with China. We borrow a lot of money. We import a lot of Chinese goods. All that, counts as growth when we spend money. But the fact that we're borrowing money to finance all the spending, nobody pays attention to that. So I don't think it's legitimate economic growth. I think it's simply more of the problem. It's what caused the last recession, the fact that we were living beyond our means and spending a lot of borrowed money. Instead of dealing with the problem, we're actually making it worse.
Well, you raise a very valid point. So if we strip away this borrowing or this artificial stimulus, what do you think would be the real growth of the U.S. economy in the first quarter, and which areas do you think contributed mostly to that?
Well, if you stripped away all the QE, all the inflation that the government is creating and exporting over to China, we would be in a recession. It would be a much needed recession, because we would be repairing the structural damage to our economy that is the result of years and years of monetary stimulus and fiscal stimulus. You know, we consume too much, we borrow too much, we don't produce enough. And all this needs to change. We need to have a restructuring in the economy, but the government is preventing that from happening. Instead, we're just borrowing more money, and we're just inflating a bigger bubble, which eventually is going to burst, and it's going to be even more disruptive when it does.
Well, monetary stimulus does seem to be the order of the day, with central banks around the world following suit with that. What do you think they should be doing?
Well, they should be doing the opposite. It was monetary stimulus that produced the problem. But the problem for politicians is they don't want to level with the voters and tell them, how bad the economy really is and what the cure for the disease is. They want to just pretend that we can spend more and borrow more, and somehow this is going to lead to economic growth. Meanwhile, if you look at the U.S., we're excited now because we're spending more money building houses, and people are buying houses, but housing prices are still too high. And we don't need to build any more houses. We have too many houses. We have to build some factories. We have to start producing some things that we can actually sell in China instead of simply borrowing money to import. But none of that is happening because the government is standing in the way.
Well, speaking of China and speaking of production, on Tuesday, China's April HSBC flash PMI index is going to be released. How closely should investors be watching this figure, given the recent economic growth figures from China have been a little disappointing? Why is it so important to focus on China's production number?
Well, I don't know how important any one number is, although I know a lot of traders look at these numbers for an excuse to do something. But I think long term, the trend is going to be for more and more production out of China. But what I'm really concerned about, and I'd like to see in China, and we have a lot of exposure to Chinese companies, we're investing a lot in that part of the world. What I'm concerned is I want to see China producing to satisfy the desires of the Chinese people, to satisfy their needs and to raise their standard of living. I don't necessarily want to see China producing just to export to the United States, because the American customers can't afford to pay for those products. And so the Chinese end up suffering because all they do is export stuff and import inflation.
Well, domestic demand, certainly one of the focus issues of the Chinese government, as you mentioned there. It should indeed be. We're going to have to leave it there. Peter Schiff, thank you so much for joining us again, CEO and Global Strategist of Euro Pacific Capital.